The world has changed. Future without boundaries is just around the corner. The way we live today can become obsolete tomorrow. A whole new dimension driven by the evolution of AI and virtual reality. Are you ready for the inevitable?
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, with the people. Floki, together, there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from Suffolk. Away on a short break, but just couldn't resist the temptation to come and see you all today. Not going to be available on Wednesday, so we're going to make the most of today. Just roll out a relatively short stream today. You're going to try and keep it around sort of 30, 40 minutes. The idea of today really is to focus on anything that is kind of giving you guys the most trouble at the moment in current conditions. So as you can see on the chart as it stands, we've just got the Bitcoin daily chart up at the moment. So if it's Bitcoin, if it is alts, if it's positions that you're thinking about taking, if it's thinking about position management, whether it's trading on the low time frames or whether people would have a greater interest in looking at our kind of daily liquidity model that we've been trading to great success recently, then I am here to serve today. So just going to give a couple of minutes just for some suggestions. If there's anything, double sessions a day then. Exactly, you know me, I normally rattle on. But I've actually got a very exciting call coming up just before 1 o'clock with one of our partners, Prime XBT, talking about how we can really kind of get everybody involved with legacy markets as well, right? Because one of the things that a lot of people kind of struggle to transition to if they're trading is moving to legacy, right? Equity markets and Forex. And the reason for that is because it all seems very different and very new, right? You know, using different trading platforms like, you know, MetaTrader, bits and pieces like that. But the truth is that, you know, a platform like Prime XBT allowed you to trade those markets with crypto. So going to have a good old chat with their team over there and see how that can kind of really benefit our members, but also our live shows and that we do, right? So what I really want to do is get us a deal whereby you guys can all, you know, sign up to use them if you're interested, and if you are, then get kind of free access to our calls to really maximize the opportunity for you guys. So with that in mind, if anybody has it, again, I'm away at the moment, taking a little bit of time with family, so I've only got my laptop with me. So going to look at, going to start with Bitcoin, but do please let me know, guys, if there's anything you really want to kind of cover today. If not, we can always look at our kind of session liquidity model. So I tell you what I'm going to do is I'm just going to turn this all off. And let's just kind of start with a real kind of high time frame view on Bitcoin. Now, the reason we were expecting a little bit of a reaction here was quite simply because we've come into this level, right? So any time that we take external liquidity like this, we expect some kind of reaction. Why? Because it makes sense, right, that there's stop losses resting above here. So this is a really, really good opportunity in place for people to take some profit, but also, you know, longer term position traders, if there's stop losses above here, when they get triggered, it's a really good place to encourage people that want to take the other side of that bet, right, to take short positions, to fill larger positions. So let's take a look at what we've got so far. The other thing that is of great interest to me that we're still within is this balanced price range here. Right, so let me just mark that up. Now, a balanced price range is where we have this bullish fair value gap here, and then we have this bearish fair value gap closing through it here, right? So as we extrapolate this across, we can see how these areas, you know, act as really, really good areas of resistance in this case. However, when we get the close above it, which we've been looking for a little while now, so we would want to see a close above it. As I said last week, from a weekly scale, we didn't get what we were hoping for, which was for this previous candle here, or for this one even, to just close above like this, but not take out this liquidity. What happens was we didn't get the close above. We had a short, aggressive pump up into this, also into this order block here. Okay, and then we find ourselves back under here. Now, it is a pretty ugly candle, all right? You know, this is what we would call a bearish pin bar. So with a very small nose. Yes, the nose is the small wick that stays out this side. If we look historically with these type of candles, let's take a look and see if we can spy any more on here. If we look, we can see some bullish ones, for example. So we can see this one here. Okay, for example, this one here. This one here as well. Just to kind of give a few examples. You've got these ones which are a little bit kind of smaller, right? But to the same principle. The idea is that we've got a long wick, right? So in this case, a long upside wick showing a lot of selling pressure. The volume is within the body. And these are kind of, you know, a little bit of a bearish signal. Now, do I think that that means that this thing is just going to absolutely plummet? Then no, you know, I'm not really one for kind of the whole kind of doomsayers thing at the moment. I think we've had an incredibly bullish run. And these type of runs, whether they're bullish or bearish, right, they don't last forever without needing some kind of correction, okay? So let's just take this example from this bearish example. Yeah, so coming down, lower lows, lower highs. You know, at some point, the market needs to cool off. So when we had this move here, this big down move, small correction here, larger down move, then we can see we started to get into this point of consolidation here. Right, so this fair value gap here, rejection, 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 strong close above, right? Resistance, turn to support, price found support again here, here, and then pushed up. So this is the kind of thing that I want to see from our balanced price range here. I want to see price reclaim this, hold this area as support, in which case then we've got some pretty nice pre-made targets here. I really like these highs here. These highs are rebalancing this, not rebalancing, but this high here is within this fair value gap, making it an intermediate term high. These are fantastic liquidity pools, so it allows us to kind of play them on a lower time frame. Let me just pop back and have a little look at some of the questions, just in case we've got anything coming in. Yeah, sure, Nick. In fact, let me have a chat with them about it today. Maybe get some video footage or some video content together for you, a nice PDF or something, really kind of explaining how to use that. Hey, Zenka, good to see you, buddy. And Trader Mum Joe. Okay, good question here from Joe. Hey, BC, I'm getting confused on the low time frame. If the market is delivering from a daily bearish fair value gap, 1 hour is delivering from a bullish fair value gap, and the 1 minute is delivering from a bullish fair value gap, do I look for a long or a short? Cool. Okay, well, again, this is all coming down to your triple screen system. Yeah. So we can definitely take a look at that today, because I really do think it's a good way to get a handle on what, framing it on the medium time frame. So what we're trying to do is we're trying to gain our overall bias from the high time frame, which with a system like that, the triple screen system that you're talking about there, Joe, is that you would want, ideally, if you were looking at a daily for your high time frame and then an hourly for your intermediate time frame, the time frame that you're framing the trade on, then you'd normally be looking to execute that on, say, like a 5-minute chart. All right, so we're going to move down to the daily anyway, so let me show you what I mean here. All right, this actually provides us with a really good example. Now on the daily, price has been finding consistent support here at this daily fair value gap, which we'll label up FVG for fair value gap and the small d for daily. Okay. Now, before we ran this, which we ran here, right, I want to focus on this interaction here. So when price runs into this, we can see that price on a daily scale is delivering from this bullish fair value gap, right? Same way as when it's engaging here, it's delivering from it as it is here. Okay. So while we're delivering from this, what we're then doing is we're saying, okay, now we move down to our intermediate time frame, which is our hourly. The reason the arrow's at the beginning of the day here, not on the wick, is because obviously as we've now moved down the time frames, this was all embodied within a singular candle. Okay. So now what we're doing is, as we go to here, is we're then looking on this time frame and saying to ourselves, okay, we're looking for a couple of different things here. We're either looking for price to be reacting from a bullish hourly FVG. Yeah. So immediately what we do is we move left on the chart. Okay. So any fair value gap that's been filled, yeah, that's a fair value gap that's been closed. So let me show you an example of that here. So we wouldn't, no, we would consider this one here. We wouldn't consider this one here, right? Because the moment that it's closed below here, yeah, we treat this as an inversion, right? Meaning that when it closes below here, we expect this to offer resistance and then as a minimum trade down to the next swing low. Yeah. So then we can see here, we meet resistance here in the form of this bullish fair value gap turned inverse fair value gap. Price then pushes down, takes this liquidity. What we like about this move is that we ultimately find support here on this fair value gap. But you notice how we didn't close below this. If I just zoom in a little bit. So the bodies haven't closed below this. So this is still offering support. So what we want to do is we can see we're getting a reaction here. Remember, this is our day that we're looking for bullish setups. So now all we're doing is finding out to see, is there a bullish fair value gap here, which there is, that's supporting price. Now, I don't care that this wick has ripped all the way through it into this, right? This gives us our premise to go long. However, notice how the bodies are massively respecting this. That means that when we come into our trading sessions here on a lower time frame, then we can start looking for long setups here, all right? So before I move on, does that make sense to everyone? Just taking a look at the comments, guys. 1 second. Ah, nice suggestion, Whack. Yeah, I can't see a link coming through. I don't know if the chat maybe stops you posting links through. If it does, mate, feel free to share it in the the Nest chat, and I can also share that with others. Or you can share it in the comment under the live stream link on Twitter, mate. Perfect. Okay, so that makes sense. So we're overlaying. The idea is we want all of our timeframes to align, right? And I think I can understand where the confusion's coming in a little bit for you, Joe, because we're talking about, obviously, we've been looking at the screener recently as well, right? Erica, how many candles do you allow between the two candles forming a balanced price range? Only one or more? Or not sure. I'm probably just a little bit on holiday mode at the moment, Erica. So I'm not really sure I get that because I'm being a bit slow, right? So in terms of a balanced price range, yeah, I don't mind how many candles go between it. You just have to have a fair value gap. Right, so you need a bullish fair value gap here. You would need a bearish one coming through here, and to be honest, the larger the fair value gap, yeah, the better overtaking. You see, we've got a very small one here. That's fine, and ultimately we fill this anyway, and this offers rejection, right? So it's fine. But when we looked on the higher time frame, we could see that it was a much larger fair value gap overtaking it. Again, I tend to look at these things in context on the higher time frame to kind of help with bias, to look where price is reaching for. Because ultimately, while we're delivering from bullish fair value gaps or order blocks, then the power of that is we know there's bullish momentum there unless it fails, like this one. We still would have expected long setups from here, but once we close below here, it then allows us, and this happened in Asia, it allows us to then look at this area for short setups. The great thing about looking for confirmation setups is obviously you don't you're not just trading these blinds, you're not just leaving a limit order there, right? So let's just pop this on for a second and focus back on this area, right? So we had our daily fair value gap here, price purges into this, right? The whole market's starting to get bearish here because we've had a really, really aggressive drop. So ultimately, when that kind of thing happens, then I'm always looking for key levels, key sweeps. I mean, look at all the liquidity we've got resting under here, right? You've got the stops that were resting under here. You've got this here as well, right? So you see this low here. All of a sudden, you're starting to build these kind of liquidity targets, right? Here, 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 right? Here as well, right? Price has just come down and just taken out all of that liquidity, which for me is a really, really dangerous place to start considering going long, right? Because price has come down, it's purged liquidity, it's convincing Retail especially, and that's not a derogatory term. I consider myself very much retail as well. When we're not talking about retail, we are talking about really, really large entities, institutional buyers, sellers, hedge funds, people like that are throwing around a lot of money. And the reason they have to play market manipulations like this or liquidity is because you are because you're at a point where they need huge positions filled, right? They can't just jump on a trend with everyone, because if the trend's going in that direction, they're going to get huge slippage because they're just going to rip the market by investing tens of millions, sometimes more, right? Especially in something like cryptocurrency, right? Which is, compared to traditional markets, you know, very, very low liquidity. Afsar, Akal, just bumped into Adrian, Crypto 2030 coins in Davos. Big hello to you as well, my friend. This is BC Richfield here. I think Adrian at the moment's on the way to the World Economic Forum, I believe. But yeah, very, very big hello from all of your friends over here at the Bird Nest. So let me just pop replay on here. And what I want to show you from here is then how we're going to decant this, right, into an action. So now as I move down to the 5-minute chart, for me personally, the way that I trade this, I need to see this happen within one of my trading sessions, one of my kill zones, right? So if you want to know more about kill zones, please do go to the originator of the source of the information, which is ICT. You can find a lot of really, really amazing information on YouTube from him, from his core mentorships. And I'm not going to go over that in much detail today, but it's purely times that align with the highest volume trading sessions of traditional markets, right? With a focus on equity markets. So the thinking behind it is that we align ourselves, right, with traditional market thinking. Now, here's our green arrow, right? We are holding, as we can see, this beautiful hourly fair value gap. So this was the purge into our daily fair value gap. That's what gives us our high time frame bullish bias. We expect a reaction here. We don't need to see this thing moon from here. We're just trying to take a nibble at what is either a corrective move, yeah? So let me show you this. So typically how price moves, right? And obviously, it very rarely is it ever this clean. Right, so if we're coming into a key area of liquidity, right, then when we do that, we come back in and we take liquidity. So here's our daily FVG, right? So on the buy side of the curve here, when price draws into this, we're looking for long setups, right? That means that then when we go on to the lower time frame, we're looking for the lower time frame and our execution time frame to line up with the same. Okay, so we then look in here for longs. That gives us the trigger on the daily. Now we don't know, right? When we're looking for long setups here, we don't know if this is going to be continuation on the daily time frame, because, for example, what we might be doing is we might actually have a fair value gap here, for example. We're looking for long setups here. Now, what happens is ultimately this rejects from a fair value gap and then goes lower. However, we don't mind, because within here, this corrective move is where we're looking for our H1 and then M5 setups. Okay, within this. So as we know, go back to our chart up here, we don't know if this is a corrective move higher before continuation. All we're trying to do is get ourselves a nibble, right? So how do we do that? One of the best ways that I find is, if we're looking at this on the 5-minute, is we want to see inducement, right? Meaning that we want to see a low swept in here. We're holding our hourly fair value gap. So where are we delivering from? A bullish hourly FVG, right? Now I want to see a couple of things. I want to see inducement, meaning that I want to see the stops run, which we can see here. We've taken out this low and we've also taken out this low. So what's then going to give me conviction that the market's ready to move? I want to see displacement. Okay, so we just draw that onto there. Here's our swing higher. We've taken a low. Price, look at the strength in that candle. So when you hear the term displacement, look at the strong close above. What you don't want to see is price go above and then wick right back down. Right, that doesn't count, right? Not for me. I want to see strength. This shows me the buyers are stepping in. What else shows me the buyers are stepping in? This fair value gap, which I'm going to do in green just so it stands out, right? So how can I trade this? Well, here's my displacement. Here's my fair value gap. My expectation is if we've taken external liquidity in the form of this high, we're going to rebalance internal liquidity here. So when we close above this here, and this candle closes, we form this FVG. I'm then placing a limit order here, which we can see gets tagged on the very next candle. I put my stop loss below the swing low. And then I can use a number of different methods. So what I would be doing is I'd be targeting these highs. Why? Well, first of all, we have what's known in terms of ICT teaching. I used to call it a liquidity cluster, which does sound a bit dated, to be honest. ICT students will know it as LRLR, low resistance liquidity run, meaning that, again, we see these untapped highs here. Yeah, price has a big habit of coming to take these out. All right. So when we see them there, but the thing that really interests me are these equal highs. Okay. So we can see here equal highs or relative equal highs. Those ones are really, really close. But also that's the key kind of swing high on the higher time frame on the hourly. There's the low, there's the high, higher low, and then it's moved up. So here I'd be moving my stop loss to entry. The other thing I'd be doing is I'd be using standard deviations to measure this out, right? Now, this is a little bit of a tricky one because our swing high is here. But what I'm going to do is this is the manipulation leg, this high down to here. Why? Because that's the leg from the prior swing high to the swing low that took out liquidity. Yeah? So that was the sweep before price purged up and gave us our entry. So if I take the low to the high of this, then my upside target is 4 standard deviations, and typically I'm looking to take profit at 2.5. So here we can see already we have a pre-made liquidity target here. So we monitor here at 2.54, take profit fairly heavily here, which gives us a nice 4.7 risk to reward. We hold our runners for 4. What happens? We get to our 2.5, we've taken a nice bit of profit, our stop loss is moved to entry, and we get stopped out over here. So let me just move back to the chat here and see if this is making sense to everybody. Zach, new here. Welcome, buddy. Really, really good to see you. Mr. Eam, my friend. I tell you what, as a real solid follow, a real underrated account here on Twitter, do yourselves a favor, give Mr. Eam a follow here. Can you pop your Twitter handle in the chat for us, buddy? Go and give this guy a check out. Always looking for these real kind of good, solid, no BS accounts, people that put their money where their mouth is, people are willing to show, people that are willing to give back to the community, and he is an absolute gem. So when he pops that in there, if he doesn't, I'll give a shout out later on Twitter. Sportsnetic Shri, where will be the highest today Bitcoin will go? 45k, really good question. We can take a look and see where our liquidity is resting, right? But just for the moment, Joe and anybody else that's kind of looking at this, does this kind of make sense how we're decanting our triple screen system? This is one we're using the example of, which is the daily, the hourly to frame, and the 5 minute to execute. I really like the 5 minute for execution. You can dive deeper into that 5 minute and then look for a 1 minute confirmation setup within it. However, I really do warn against that with crypto because you just don't get the percentages, right? You're literally with this, you've got a 0.53 for your stop loss. Now let's use my good friend and just absolute beast of a trader, Razoon, one of our awesome trading team over at the Bird Nest, and also just an absolute little genius with code. Made this position size calculator for our members. Oh, sorry, just taking a sip of tea. Right. Now, this thing is brilliant. I use this all the time. Why is it important? Well, all I did there is you just simply take your line, you put 1 on your entry, 1 on your stop loss, 1 on your target. Yeah. And down here in the box, you get to input what your account size is, what risk percentage you want to take. So, for example, on a $1,000 account based on 2% risk and 10x leverage, it calculates all of this for you. Now, what we need to look at here is position size. This position size is $3,648. Now, if I'm limit ordering here, then that probably leaves me maybe a couple of bucks in fees to open. And if I'm limit closing, another couple of bucks, yeah, to shut. market orders will be higher. You get penalized for market orders because you're taking liquidity from the market rather than offering it. So what we need to be aware of is that if we're wrong on the trade, our risk here is $20. It's 2% of our $1,000. However, it's not just $20, is it? Because we have to factor in our fees, which are going to be another $4 or $5 on top. So actually our risk is $25. Yeah, does that make sense? So now when we look at this, we say to ourselves, okay, well, what's our potential return here? Well, our potential return here is $92, right? However, what I really want to be aware of is if I'm moving my stop loss to entry here, remember, because this is our first swing high and also equal highs, then I want to take enough profit here to cover my fees. So I need to take $5 out. Now, this is good because even to get to here, let me adjust that so you see where we're showing at 2.51, that gives us a return of $48. That means to take $5 there, I'm really not shutting down much of the trade, like 12% or something, which means that I've got the lion's share to run to here. Now, if I'm refining this further onto a 1 minute, right, so let's close this for a second. Or actually, we'll leave it there, but I'll move replay forward just a smidge to here. So if like we've just done with our daily to hourly to 5 minute, if I'm now taking this another step further, let me just hide that for a second. And I'm going to look for a 1 minute setup within this green box. Right? So remember what we said. We want to see a sweep inducement, right? Which we get here. We want to then see the market move. We want to take out a higher with displacement. We can see we displace beautifully above this higher. And this is where we leave our fair value gap. Right? So if I'm now trading this on a 1 minute, we've still got our pre-made target. We still keep our targets on the 5 minute. What we can do is we can run our standard deviation again. Yeah. So this is the manipulation leg down here that takes liquidity. So we see here, we would expect that to get to here. We look to the left. Where's pretty obvious here? We've got this higher. So this is where we'd look to move our stops up on a 1 minute scale. So how would this entry look? Well, I'd first of all have a limit order placed here. Had we already taken internal liquidity before we hit it? No, because this is the first key swing higher. If we had, meaning if this move had gone and taken this internal high first, then I wouldn't enter this position here. Why? Purely because we'd already taken internal liquidity. So if I'm wrong, then, you know, the likelihood lessens greatly. So now this isn't the worst example because here, this is where we'd have to put our stop under this swing low, right? Our first target is here. Ultimately, we can see that we run this beautifully to here. And then when we look at running this up to 2.5, we can see we get a much better risk to reward. So what I'm going to do is I'm just going to bring this position size calculator in line with this. Now, remember when we were dealing with this on the hourly, and I'm drawing your attention back over here to this box. When we were dealing with this on the hourly, we had like a $3,000 position here. This is now 5, meaning that our fees on this position go higher. So market ordering on here, where it was maybe a few bucks before, you know, if we were talking $5 overall, this is now maybe looking more towards between $6.50 and $8, right? So that's not a problem at this level. However, if we had a lower percentage for the stop loss, so let me adjust that to here. Now we can see we've got a position size of almost 12,000. That means, you know, 0.1% of our fees there are $12. If we're market ordering, that's $12 to open, $12 to close, right? So this is where you always want to be really, really careful with your fee allocation, all right? Does that make sense? Yakuza Kana, hello, mate. Great to see you. Gordon W, welcome. Bedford, solid part of the country, that is. Makers of just some exceptional vans as well. Erica, yes. Lovely Geo, yes. Brilliant. Trader Mum Joe, brilliant. Hardy, you absolute beauty. A dear, wonderful friend of mine, Hardy, all the way from the States. You absolute superstar. That is brilliant. You absolute legend. Great to see you on here, mate. Hope everything's going wonderfully for you and the family. Imran Khan, you beauty. Lovely to see you as well. And Mr. Aim, no, you're very, very welcome, mate. Mr. Aim, just remember to pop your Twitter handle in the comments for us, please, mate. Be great for people to give you a shout out and check out your stuff. Always dropping the alpha on Twitter for us. So that makes sense, yeah? So let's take a look at where we are at the moment. Let's pop ourselves back to our hourly. Let's get rid of our replay and let's see what our expectations are for the day. Now, I'm not the biggest trader of the London session, actually. I do trade it, do trade London. I like traditional market assets in London because the alignment for me, Forex markets are brilliant in the London session to trade, obviously with aligned assets and equity markets as well. So what will we be looking at today? Now, at the moment, we're showing a little bit of caution here. Obviously, we can see we've got this bit of resistance lining up here. Now, this can also act as opportunity, right? Because look at what we said before. We have these nice untapped highs offering us liquidity here and even all the way up to here. So now we need to ask ourselves where we're delivering from. And ultimately, in London this morning, we're delivering from here. All right. So I didn't take it. I'm not trading today because I'm away. I'm on holiday, but I would have been long this morning in the London setup. I'll show you the setup that I put on. We'll see how it's doing actually. Market conditions are a bit flat today. Another reason I wouldn't have actually taken this today is because the read on market conditions isn't overly clear. If you notice, what we're doing is we're kind of trapped between these two fair value gaps. But I wanted to put it on as an example that we could kind of look at on the live stream. If for me, we're in a situation like this that isn't really, really clear and obvious, then I just don't trade it, right? I used to. I got myself chopped up all over the shop for years and years trying to kind of enforce my will on the market. Now I just step aside. Look, this thing could absolutely rip from here, yeah, and just absolutely go to the moon. But I don't mind. You'll always get more opportunities. For me, I like to take the really, really clear and obvious setups. So let me show you the setup that I'm talking about. And we can see even in the basis of its delivery how choppy it already is. Okay, so delivering from a bullish fair value gap within our London trading session, meaning that we now move to the 5-minute chart. Here on the 5-minute chart, we had a few different types of entry. For me, I was using my inversion method, which I really like. So that was the inversion of this 5-minute bearish FVG. Yeah. And what we did is we had a really, really strong close. So I typically place a limit order at the 50% mark of this candle. If it had been a close round about here, I would have just kind of market entered there. But again, we have to expect and respect the fact that our market entries are going to cost us more. Okay. And this is where I'd be looking to run it to. However, look, what we're doing at the moment is we're just kind of ping-ponging between these. Yeah, so for me, there's very little upside to this at the moment. So the mitigation of risk is necessary. However, you know, if you were thinking about this as an automated trading system, you wouldn't have that context, right? You would just have to be taking your entry. So the other thing that I just like to show you is if we're aligning that, and I highly recommend what we were looking at before as a more reliable system for entry. I love using the inverse method, but it does take quite a lot of kind of nuance to understand which one should be trading from, which one price is delivering from. Where if we were looking at this here in the same vein, we're delivering here from our 5-minute bullish fair value gap. Remember what we said before? If we didn't have this, remember this is if we didn't have this bearish fair value gap atop, which is what we're rejecting from here, we would have been looking for this sweep. Yeah. We would have then been looking for this, right? Which is this beautiful displacement above. Then we've got two fair value gaps here, the top one and the bottom one. So when we have that, we want to apply our principles of premium and discount. And we want to be long from the fair value gap that is down in discount, okay? So in this case, our entry would have been here, our stop loss would have been here, and then ultimately our first target would have been here, which is when we would have looked to move our stops to entry. Okay, so this would have been our setup today. Like I say, this thing could absolutely rip from here. And I do think it will probably go up today. I think the liquidity is resting to the upside, is there, and it's ripe for the taking. But would I have taken this? No, purely because we've got this here. And it just adds a layer of complexity and uncertainty that I don't want to expose my P&L to. Yeah, fine, I could sit here, and because this looks bullish now, it looks like it's going to go up, right? Higher high, higher low, looks like this thing's pumping in here, ready to rip. We've inversed this fair value gap. That should have been suppressing the market. It's now offering a lovely amount of support. So I could sit here and lie to you and try and make myself look good and say, yeah, we're going to rip for this brilliant live trade, blah, blah, blah. But I wouldn't have taken it. I wouldn't have taken it because it just wasn't that clean. All right. So let's just have a little look here at some of the questions as well. Nick, got to go work calls. No problem at all, mate. It's going to be a little bit of a shorter session today anyway, buddy. So hopefully that's good for you. You have a good day as well, mate. Yakuza Kano, long on ETH since this morning, looking for liquidity to be taken. Nice. Yeah, I like ETH. ETH's a little bit of a cleaner setup. I didn't get the 5 minute on ETH this morning, unfortunately. Yes, there we go. Guys, do yourselves a favor. Just go and check Mr. Email, yeah? EEMALIR, yeah, on Twitter. Always get a lot of value out of this guy. Really honest, a person that I've seen just develop fantastically well. You know, a student, if I'm not mistaken, Mr. Email, my good friend Trader Dank, and just somebody that is always giving a really, really good account of themselves, and someone that's really honest. People like this, these are the kind of people you want to follow, right? Jono, hello. Trading only the hammers. Is that good? Okay, well, let's take a look. I'm guessing you mean the hammer candles, not the mighty hammers as in West Ham. That would be a volatile thing to trade. Unen, you're very welcome, mate. Thank you, thank you, thank you. And then Gustavo, massive consolidation ahead. What do you think? Great analysis. You're very welcome as well. So, well, let's take a look, shall we? Let's take a little bit of a look for the next few minutes here on the higher time frame. Hopefully that makes sense to everyone as we're kind of looking at that at the moment. Just to give an example back here, we had a lot of really, really nice trades in the last few weeks from just very, very similar areas, right? You know, we had this beautiful inversion here. So this here, this served us all the way through, all the way through here. This served us all the way into Friday, and then we even got this just heading into London here. So wherever you are, when you align your trading sessions, right? And let's just flick this to a random point on the chart, right? So you can see we're not cherry picking. What I'd recommend for people, if you're really struggling with bias, is looking for a couple of different things. One is always where price is delivering from, yeah? So let's look at this day here as our example. So here's our London session. So I'm just going to draw the two lines on here so we can see the day that we're talking about. What day was this? This was Thursday, 28th of December. So as soon as I step into the charts, I'm asking myself one of a few things. Where's price delivering from? Where can it be reaching for? Yeah. And have we changed the state of delivery, especially if we're delivering from a fair value gap? Now, in here, the first thing that strikes me in our New York session is this. I'm just going to do this in green, just for anybody that's new on here that sees this, just to show that this is a bullish fair value gap. But normally you'll see these on my charts as grey. All right, we can see the bullish intent. Now, a little bit of caution here, because as we step into this, we can see that we're still ultimately delivering from this bearish fair value gap over here. Right? Price comes in, delivers from this. Now, we've delivered from this, and now we're drawing down into this bullish fair value gap. As soon as we engage with this, the idea, and Erica will love this, but recency for me, I am now looking at this bullish fair value gap. So I'm looking for bullish setups here, right, in New York, which starts at 1:30 UTC for me in the afternoon, is when I'm looking to get involved. Now, look at this, right? Whenever you see equal highs or relative equal highs, they are just such a powerful draw on liquidity, right? You see a lot of people talk about it, especially people well-versed in ICT. So when we purge liquidity here on the lows, And we always want to zoom across as well and say to ourselves, okay, well, where else are we delivering from here? Remember, it's all about delivery. Well, we're delivering from this, right? A bullish fair value gap. So now we can see how price action's coming together, right? This is all hindsight because we're talking about trading this day, but we're looking at the previous day to see what price has done. It's left equal highs, which is engineered liquidity, in my opinion, meaning that once we've purged liquidity here, we're delivering from a bullish fair value gap, right? Now, let's tell the story of price. What's happened here? We've now changed market structure. So we've had a market structure shift, meaning we've moved from a downtrend to an uptrend. Hang on, just quickly. What's the time, Erica? 40 minutes in. Remind me, Erica, when I forget later, to tell QBS that we are 40 minutes into this, yeah? 4-0. Perfect. Still trying to find that one with recency. Brilliant. I'll try and dig that out as well. So, market structure shift here, okay? Just bear with me, guys. If this seems convoluted or it's complicated anyway, please just let me know. So, delivering from a bullish fair value gap here on the hourly. We've purged liquidity. We've shifted structure here. 1, 2 solid bullish candles, right, with good bodies showing that price is ready to move. Now what are we doing, right? Delivered from a bullish fair value gap here. Now price is pushing higher. So as we get here into our New York trading session, which is my favorite to trade, then I'm not concerned about this. We've driven into this and price is now corrected. If price rejected from it and closed below this, my expectation is for price to be coming to search out liquidity lower, either in this FVG here, but ultimately below swing lows. That means on a lower time frame, I can get the action moving down into this. But we didn't get that, did we? Right? What we actually got here is price held this. And look at these downside wicks, right? Downside wicks here showing absorption, showing buyers are stepping in. So now we're going to move to our 5 minute, yeah? Showing that we're just following exactly the same things that I described to you a moment ago. Just checking the comments quickly, just make sure this is... Yeah, and I'm going to take a look in a minute as well, Jono, for you and show you about hammers quickly. We got about, kind of maybe push this for about another 7 minutes. So now I'm going to move to a 5 minute chart. Here's our box, yeah? So we need price to be delivering from a bullish fair value gap on the 5 minute as well. That's a condition that I like to see, okay? I'm not saying you have to be the same, but for me, I like all these things to align. That's how I'm going to find my high probability setups. So what else did we say we wanted to see? We wanted to see a low taken, right? So we've swept this low. We've also swept this low down here. So both are significant. Ultimately, we've purged liquidity. We're respecting this bullish fair value gap on the 5 minute. We're respecting the bullish fair value gap on the hourly. Okay. And we have a pre-made target resting above us. Yeah. With these equal highs. So we've run them. If price is now going to fall back from here, we would expect this to fail, but it doesn't. It's holding. So the assumption now is that price is still bullish, and we're now looking for this to hold as we push up higher. So within here, what else do we need to see? Bearing in mind, we haven't quite got to the start of our trading session yet. So there's a few things I still need to see. I need to see a market structure shift with displacement. Do we get it? Let me make that a bit thicker. No, we don't. There's no displacement above this. Rejection, 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 right? So now we need to reset this and say, okay, well, now what do we need to see? We want to see price purging back in to our 5 minute fair value gap, taking out some kind of liquidity. Now, what we have here are relative equal lows. And you can see how we respect them, right? That's based on that secondary one here. Now, price runs these lows. Why do we want to see these sweeps? Well, if we don't get these sweeps, we don't get these purges of liquidity, we're never entirely sure if the market's ready to make its move or not. Or I'm not entirely sure anyway. That's the way that I look at it. So what I'm seeing here is price has come down to take liquidity and it can't close below. Yeah. Again, we're looking for absorption. Look at the way the wicks are dipping into there. Now, We're just looking for exactly the same. And let me tell you why this is a little bit more important. This is also an intermediate term high, meaning any high, there are other parameters. Again, please do check out ICT's core mentorship, but this high is in this fair value gap, meaning that we don't expect price to close above this. If we do, then the expectation is that this has failed and price is going higher. So again, price has purged in, taken liquidity. We've broken this high with displacement, big body candle, another big body bullish candle. What do we leave in its wake? A bullish fair value gap. Once we close above, confirming this, we enter our limit order here. Price goes below the swing low. And then if we're going to use this again, we use our standard deviations. This is the move that purges liquidity, right? You could argue it's this the high down to here. However, I would favor this move lower personally, right? Low to the high, bring up our standard deviations. I'd like to see this get to a 2.5 to the 5, 2.5 to cut off here. All right, which is when we're looking to take some profit and we move our stops up to entry. So you could get chopped up all in here, but you just don't see the inducement. You're not delivering. You're back within the fair value gap here, but you're also not. Look at the bodies, right? With this, you're not really delivering from that fair value gap as such. You're kind of delivering from the body of these candles. This wick here, yeah, goes underneath these and back into this void that hasn't been filled. That's drawing on that liquidity that rests there. This is the displacement, yeah. This is the drawback that allows us to get our limit entry, which gives us better fees. And then it's a little bit choppy here, but ultimately we rip higher, okay? So I hope that makes sense, guys. If it doesn't, please reach out to me. We're running a little bit short on time, so I just want to cover here for our new friend Jono, who's talking about hammer candles. Now, I think my really wonderful friend Pedro, Pedma7, did this brilliant study into hammer candles, right? So again, time frames and everything like that are important as well. But what I would say is when you're with the trend, yeah, so here, if you just monitor the market, use your fair value gaps and that, just areas of support and resistance, then when you see, you get your structure shift, right? So here, we got higher high, higher low, so sorry, higher high, higher low, higher high, higher low, right? As price is moving up. Now, what you can look for in these situations is if you're looking for hammer candles, while you're in an uptrend, I would look towards hammer candles and bullish engulfing candles in an uptrend, or pin bar candles, which are, you know, inverse hammers like this, and bearish fair engulfing candles in a downtrend. But if we just look really quickly here, and while we're in this uptrend, so only while we're setting higher highs and higher lows, right? Then, so for this trend up here, and a good way you can do this as well, guys, is just, you can take that and then I like to do it in a way where you're not violating the bodies. So the wick here to here. So you see this area of support. We can see it's keeping us in a nice uptrend, right? Now, if we're looking for hammer candles, so for anybody that doesn't know, a hammer candle is, this is a great example of a bearish one. Again, it's a pin bar really is another name, and this is an example of a bullish one here. Now, if I'm looking at hammer candles or bullish engulfing candles, purely because we're in an uptrend, and the success rate is higher as a percentage if you're using this with the trend, all right? So for example, we'll look at both. Let me just put lock on very quickly. So as soon as we've broken structure here, let's look at all of our bullish engulfing or hammer candles in these trends. We've already got that one marked there. We've got this one here. We've got this one here. Okay, so that just gives you a few examples. And look how successful they are. So an engulfing candle is I focus on the bodies. It's a bullish, in this case, candle that's body completely engulfs the previous candle. Yeah, the bearish candle. So that's showing us bullish intent. Now, if we look the other way, if we're counter trending this, counter trend trading this, sorry, we notice it's not quite as successful. What it does do is give us really good insight on when we're getting these pullbacks. Yeah, bearish engulfing, no engulfing candle there, but you do get a bearish pin bar or hammer there, there, there. Obviously, all of these, right, show you that this is a corrective move coming down. This one here, here, all right, here as well. So if you are somebody that's trading candles like that, engulfing candles or pin bars, I think you'll find you get a much higher success rate if you're doing so. First of all, on the higher time frames, this is probably a little bit low to be doing that unless you're using it as a trigger mechanism. You can do some interesting confluence with these, right? Like looking for fair value gaps. So bullish fair value gap here, right? Hammer candle, boom, price rips away, all right? So stuff like that can be interesting as a trigger, but if you were looking at this on a higher time frame, whilst you're with the trend, these give you your entries. Yeah, then when you counter trade them, these are what give you your pullback. So look, as soon as the arrows stop being red and go to green, lovely entry. Arrows stop being red, go to green, lovely entry. Arrows stop being red, go to green, lovely entry, same and so forth, right? Then when you shift like you do here, you shift structure bearish, then you're favoring bearish engulfing candles and bearish pin bars like these. Bearish engulfing, bearish pin bar. All right, guys. So if you're still knocking around Jono, hopefully that has been helpful for you. All right. Thank you, Mr. Eam. You're a legend yourself. So, guys, I've got to go. I've got a brilliant call with our partners, Prime XBT. Now, going to look at some traditional markets and talk about how we can get you guys some awesome offers and deals to get onto those, because I love trading equity markets, and I really want to share that with you guys a bit more. But I understand there's some barriers for people getting onto those, and that's what Prime XBT are looking to tear down to offer you guys access to the legacy markets using crypto. So I hope this has been useful. Like I said, I'm not going to be live Wednesday. I'm going to take a few days off this week and just kind of refresh myself ready for what is a really big week ahead. Craigie boy managed to squeeze this one in just within your lunch break as well, didn't we? Which is a rare gem indeed. But thank you all so much. It's just awesome to see you all every week. Really do appreciate you all giving up your time to just listen to me waffle on about my thoughts on the market. It really is a blessing. And no late night tonight, mate. You're right. Get yourself home, crack open a cold one, or maybe a nice brew and enjoy some time. Thank you all so much. I will be active on Twitter, bits and pieces. If I see anything of particular interest, I will let you know. But do trade safe. Keep an eye on the economic calendar as well for any news events. And if you are interested in trading with us, I'm about to get some offers across to you. Do keep your eyes open. You can come and get our calls for free by signing up with our partner, Prime XBT. You can get some great deals and offers to come and join the nest or take a trial if you're interested. And if not, just reach out to us on Twitter. All right. Richard, you're very welcome, mate. So normally every week be live with you guys on a Monday and a Wednesday at midday UTC. Looking forward to getting back to it full bore next week as well. And a really big shout out to everybody. And please do remember to give our good friend Mr. Eam a follow on Twitter as well, and make sure you're gobbling up all the alpha that he's got to offer. All right, guys, look forward to seeing you soon. Have a fantastic week. Trade safe, and I'll see you around the nest.